Hi guys, welcome to Sylvia Baroque with sylviabaroque.com. In today's video, I'm going to talk about Netflix stock price prediction. Stay tuned. Before I start guys, make sure you check out my free trading course and also feel free to join my Discord chat. I'm going to post the link just below in the description. Also, thank you so much for subscribing to my channel and for liking my videos guys. Now, before I start, I would like to talk about in general earnings season, how to trade through earnings and what is the best things to do and not to do through earnings. As we know, Netflix releases earnings tonight, so it will be very interesting and volatile, and we need to be prepared for that and look at some important levels to position ourselves maybe tomorrow. So let's check out the current chart on Netflix. As we can see, Netflix is on a very nice uptrend. It had higher highs, higher lows. But then after July, as we can see here in July, we started to go pretty much sideways all the way until now. So we see we built here very strong resistance and very strong support area. Now I'm going to explain why are those important support and resistance and why you should watch for those levels. And you see that here picture perfect how support and resistance works. So let's take a look and see what happened. We see here a very nice support area at 463. So every time the stock, after the stock broke out here, this is this previous breakout, after the stock broke out, it went higher, pulled back, and this was the first dip here, 463 area. After this, the stock started to go sideways, consolidate, make a new move to the upside, and almost reached the previous high, which is also the resistance area. So previous high, which was here, is resistance area. The stock tried to go there, but it couldn't make it. Pulled back and went again into this previous low. So we have now 3 times test of this 463. The more times this area gets tested, the more important it becomes. And now what does that mean? This means that every time the stock goes into this support, buyers are stepping in and they're trying to buy this stock up there and not allowing it to go lower than this price level. And with the stock market and in general stocks, we move normally from one level to the next level. This is nothing random here. This is no magic. You don't need any indicators. You don't need any prediction kind of indicators or whatever you're using or fancy strategies. This is basic and simple stuff, and it is called support and resistance. And this is what I personally use for my trading and what I personally teach, because I think in simplicity is the key, and it is very important to understand those simple things in order to be successful over the long period of time. So as we see here, the stock pulled back into this area, bounced off this area, and what happened? Where did it go? It went to the previous high again, which is 558, and actually tested even the resistance above, which is 571. And it is pretty choppy price action though, so this is kind of a channel price action of the stock, where the stock moves only from one level to the next level, pulls back, and it holds this channel. So you see that very clear. We don't have here in this particular case an uptrend. Everything goes upside down, and sometimes if you're a trend trader, it is very hard to trade that kind of price action. So you need to be very fast on taking your profits, and also you need to respect your stop losses in this kind of environment. So what happened here? The stock pulled back. Here was earnings, gap down, and tested one more time 463. So this is here really a magical number already. And after this pullback, again, bounce of this pullback, and what happened is we went a little bit higher than the previous resistance. So the previous resistance was, like we discussed, 571. It was tested here a couple of times, this area, and we broke above, but we couldn't manage to hold above this area. And this was earnings here. So you see all the time, you see those gaps. This is always through earnings. That's why we're going to talk about this right now, because Netflix releases earnings later on, and it's important to understand what to do and what you should not do through earnings. So what we see is nice gap up, but after earnings, normally we see a lot of volatility. And what happened here is we broke out through this resistance area, but then immediately pull back again, And in this case, we see this previous shorter term support, which is 489. So we built here a small support area, and Netflix pulled back into this support area, bounced here a couple of times, 2 times, and it reached this shorter term resistance. So overall, it is a little bit choppier chart. It is harder to trade if you're trying to make swing trades here. It might be a little bit harder to trade. And I also want to mention, what does it mean to trade through earnings? So in general, regardless what company we have, we just don't know the reaction of the investors before or after earnings. This means we have a lot of times stocks which beat expectations. They're having much better than expected earnings. They're doing well. They have very nice KPIs. But then all of a sudden, what happens is that the stock, instead of gapping up, it gaps down, and you just cannot control the reaction of the investors and traders in this case. And sometimes even through good earnings, you might see a gap down, which is of course a high risk. So for me, trading through earnings, this is more like gambling. It's the chance of winning there is 50-50, because even if you have done the greatest research, you just don't know what is going to happen. It's more like a casino, going to casino and playing roulette. You just don't know the reaction. And the other part is, a lot of the times, even if the stock gaps up, like we saw here in this particular case, after that we still have a lot of volatility. So it can be volatile for a couple of days, and it can start to go down, or just be more volatile, expand its range, which makes it harder to trade. So what I want to do personally, if I know that the stock has earnings very soon, if I am already in a trade, I am going to try to close it if I haven't done anything. If I am slightly negative in the trade, I might keep it just because I'm already not in the profitable zone. But if I have profits, I will try to close most of the profits and just let it run and see what happens after the earnings. And if I don't have a position at all, which is the best case, then I will personally not open any position, because you just don't know what is going to happen, and you're putting yourself into a riskier situation where you might end up just losing more. So imagine, for example, right now, if you buy here at 558 and you think, well, it has very good earnings, it is going to blow off, it's going to break out here, it's going to go to 650. I know that, but imagine you bought here 100 shares at 558 and it gaps down. What if they just have or say something bad, or some reactions of some of those investors are bad? And what if all of the sudden it gaps down and opens here 450? Now you are in a position where you're losing $100 per share, depends on your position, where you just haven't calculated this. So you just don't know the outcome, and that's why I personally try to avoid a couple of days before earnings to trade the stocks. And if I'm already in position, I have to make the wisest decision. What should I do? How should I manage the position if I'm already in that and I haven't taken profits, or if I'm slightly in a loss? So that's something very important. Now let's check out in general what were the earnings of Netflix, and what can we expect, at least to be prepared after that, what if it is still a good buy. So as you know, I'm using here this website for that, and I'm looking at the profitability, and we have here pretty nice profitability rating of 7. So Netflix has a return on assets of 7.3%, which is one of the best returns in the industry. The industry average is minus 14.61%. So Netflix outperforms 100% of its industry. So this is a good thing. And also we have a decent profit margin here of 11.05%, which is one of the best returns in the industry as well. And the industry average profit margin is minus 23.69. So overall, Netflix looks pretty well. Valuation, I have discussed a lot of times, Netflix is a growth stock. Of course, most of those growth stocks are overvalued. So this is something, if you're worried about value and you want value stocks, then you should go away from growth stocks, because value stocks and growth stocks, it is just not matching with each other. You will not going to find a lot of those. But let's go and see what we have here when it comes to growth. So growth rating of 9 out of 10. Of course, this is awesome. And Netflix shows strong growth in earnings per share in the last year, and the earnings per share has been growing by 47.22%. And also we see here that Netflix shows a strong growth in earnings per share in general over the last 5 years. It's been growing by 81.35%. So this is very, very nice growth, and I always like to look in the past years, because every single company can fake their results over quarter over quarter. So I like looking what happened there. And also another thing, if you really want to go into detail and do a little bit more research, feel free to check out sec.gov. This is the official site where every company uploads their filings quarterly, yearly. You can see everything there you need to know, and it is much, much more detailed. Of course, this is just an overview for you guys. I don't want to overwhelm you. So yeah, that's that. And as we can see here, revenue is also very nice. It's been growing by 24.01%, and Netflix is expected to show strong growth in earnings per share in the upcoming 2 years. It will grow by 45.65%. So this is huge. And we see also here this growth on this chart, and also quarterly earnings per share versus estimates. So we see here we had a little bit more estimates than reported, but that's what we have now. So this is a very nice growth stock, and it is profitable. The only thing what I don't like is this messy chart. It started to get really messy and hard to trade with this channel and upside down price action. So pay attention to that, guys, and thank you so much for watching. Stay safe, and let me know if you have any questions. Bye.